Everybody, good afternoon. Doc Severson here with you with the 12-minute trading Monday session that we do, our live market update. I'm joined here by Dave Lukas. Today is the 17th of November. We're already halfway through the month of November, and this year is not exactly shaped up the way that we expected so far. But what's really odd that we're seeing right now is we're literally 3% away from the all-time highs.
Yeah, three
And
and a half maybe.
and I'm just you could cut the tension with a knife. I mean, it's like I
Extreme fear
extreme
everywhere.
fear everywhere. So people are scared to death that a bear market is right around the corner. I think this all started a couple of weeks ago. Michael Burry kind of spooked everybody. There's been other things that have happened. The Fed is not playing ball right now. The Fed is every time they open their mouth, they're like, "Well, we're not 100% sure about cutting rates." And now we've actually the probability is such that on December 10th, uh, the market is handicapping then to hold rates, which is
Hmm.
a big disappointment to most of those that are trading risk assets. Certainly, with the Russell 2000 stocks, don't enjoy reading that. So
Well,
strange days right now as we get into the final weeks of 25.
and there's other variables out there too. So with the government's back open, we're start getting some data. So there's maybe some jitters around that. Although negative data could be helpful for the Fed. So that negative
Hmm.
could be a positive in this case.
Right.
You got NVIDIA earnings this week. That obviously will be a big mover in the markets. The other thing that people aren't watching as much is Japan is rearing its head again for the carry trade, which is, just long and short for you that haven't really paid attention to that is that forever Japan kept their rates at zero, and so you could borrow money at zero from Japan and then basically arbitrage that and use it to put into stocks and other things that had a bigger return and basically keep the difference, right? That's the carry trade. Well, if Japan has had a bunch of trouble trying to keep rates under wraps, and they have lost control of it. And now they're coming up with a stimulus that they want to do, which is incredibly inflationary. Remember, they're 230, 240% of GDP in debt. And so that's causing some issues because that carry trade really is coming to head again. And like it did last August. If you remember last August, we had a nasty move down about 10% or so in a span of just like a week and a half because that Japan had the same type of issues. So, that's back in play again. And that may be something bigger. That may be the kind of thing that comes out of left field that really causes a bigger issue here. But as of now, we've got, and you'll bring up the charts and show them, but we've got a daily chart that is basically been noisy, but it's gone nowhere for the last couple weeks. And I noticed the last two Fridays, anytime we got down, to that 6,600-ish level, a major buy program came in and bought it back up. So today we'll see if that comes in to play at all. But the sideways action has basically charged up the daily chart, and it's really served to charge up the weekly chart. The weekly chart looks like a nice steady uptrend, and it's just walking sideways, charging back up, getting ready to go again. So that's kind of where we're at. We don't know how this will resolve yet, but I will say this: over the next couple weeks, we're going to know the direction of the next longer term trend. So it pays literally to be patient right now.
Right. So what this means here is that we have a weekly chart and a daily chart, and both of them are relatively. You can view this almost as a fuel gauge down at the bottom with full and empty. So both of them have almost full tanks, and this is we're on the cusp of a relatively big move into the end of the year. So we could go for a number of weeks based on this. Now, which way is this going to go? Typically, range contraction goes to range expansion, but the range expansion can go either way. This could go to the upside or this could go to the downside. Now, if we go over to the monthly chart, here's where we have a little bit more context because we have an exhaustion level down here that typically has over the last several years or even decades typically shows that that's about where it stops. And we do get some corrective action. Now in 24, we had the same signal back here in the summer of 24, and we got a full 10% correction out of that. It was very rapid. It was over before I think most people knew it. But you could see this one here, just like bam, and it caused a slingshot. We had another week of uncertainty here, and then ultimately, we're higher. And you look at this over, you look at this chart on the monthly chart, and you go, oh well, there's no big deal there. But living through that July and August, and I know this was giving you fits, Dave. You know how it
Mm-hmm.
wouldn't stop, and then all of a sudden it wouldn't stop moving to the downside. So
Look at
it
that
was,
giant candle,
yeah, it was it
that
was a
hammer candle.
huge it was a huge whipsaw that we had. So I keep wondering, where's the whipsaw coming now? Which way is it going to go? Or are we just going to continue going sideways, which is what we saw back in 2015, 2016, where we just got a horizontal bear market. It didn't go anywhere for the better part of a year, and we never got the 20% vertical movement. So right now, again, this is only 4.3%, I believe, something like that. We have not even hit 5% for this
Mm.
corrective move. So I've got this listed on the ES here. You can see where the 5 and the 10% come into play. So 5% would be right around ES 6600. So we've only got what 80 points to go, and that can happen in the span of an hour. so
Mm-hmm.
so there's your 5%, and this is where I'm going to get a little bit more aggressive. Once we do get to 5%, I'm going to start to nibble on some of our long delta put strategies, with the idea that maybe we'll see some kind of a move like this down to 5%, maybe overcorrect, come back, trap everybody again, and then we get the actual move like this. That would set us up for the majority of 2026. If we get something like this, then we're literally set up for months to go into the future. If we rally from here, I believe that's going to create a very, very unstable market
Mm-hmm.
as we get into 26, and it may just crumble
Yeah,
from
that's
there.
the thing that I go back and forth with is do we get is this enough where we're in extreme fear off of this? Maybe we do, we have today's accelerating, right? So maybe today's the day, or it continues into early this week. We get some data, it finds some support, and then you get like this rip and rally, into, around Thanksgiving next week into the December months. And then January, February is when we start to see things really get ugly. Like, is that the, is that the type of thing we see? Traditionally, that time between Thanksgiving and December is an uptrend, but we've had some nasty moves in the middle of December because of the Fed. So I think
Hmm.
you may get a run up into the Fed, and then if the Fed, gives more hawkish guidance, right, then you could really see things accelerate. So what you're saying about dipping down now, getting a relief rally into that could play out, and then yeah, you could get ugly into the end of the year.
You know what the answer
So
always is, and it's always obvious after the fact, but the answer
obviously,
is always the market will move towards the pain.
yep.
Whichever way is the most painful, most excruciating direction for the market to move is the way that ultimately it will move. So
Yep.
if we have an excess of short holders that are out there that are negative on the market, we in fact could,
Hmm.
as you state, climb that wall of worry into the end of the year.
Yep.
I don't know right now. It's
Yeah,
it's
we just have to watch price and see where this thing plays out. This isn't the release of the charts yet. So
yeah.
the weekly's the one to watch. The daily's gonna be no is gonna be noisy like we're seeing. But catalyst for today, you can pick a bunch of things, but it's more just fear across the board. Like you said, it's what'd you say, babe? I mean, you and I were talking before, and you said you haven't seen a market this afraid in a long time.
It's well, not 3% from the all-time highs. I mean,
I
we've
know.
certainly seen blood-curdling fear in the markets, but usually after a bout of selling and like, oh no, this could get worse and those
Yeah.
kind of things. But I've never sensed something that is so close to the highs and people are just terrified
Yeah.
of losing it all. And we're actually
Which is,
seeing that right now in crypto. Unfortunately,
yeah.
is like we just topped out at the beginning of October into brand new highs. We've already lost more than 25% of that,
Yeah.
which is
Which to me, like that's why like getting a massive rally from that type of environment makes sense. But again, what you got to look for the catalyst. So maybe it'll be Nvidia earnings this week. I'll put because remember we've got that whole the Michael Berry things that AI is a joke and it's a giant bubble and it's gonna pop and it's not worth even close to what it's worth. That's what he's betting against. And he shut down his fund too. So like he's just like I pushed in all the chips and shut the thing down. I'll call you in 2 years or whenever it happens. And I think there is going to be a reckoning to that at some point. It's not going to be like the dot-com bubble. These companies all have revenue streams and earnings and all of that stuff going in. They're not just slapping buying a domain and saying we got a business now and taking it to market, right? So it's a different world, but there's a lot of leverage now. There's a lot more leverage out there. And so, one of the things that you saw in crypto that kicked us off, you mentioned it, when you and I were talking, is that extreme leverage is used in crypto, and a lot of that was taken out to start this move. And that's what was the catalyst. The big catalyst was taking out that leverage. So,
yeah. Marcus got a
we'll
question
see.
here about the weak
Yeah,
hands in Bitcoin, and
yeah.
I think there's almost several levels to that. So the weak hands in crypto, the weekend bulls would be those that bought in at the top at 126,000. And by now, weeks later, I think a lot of them have disappeared. But what we also saw, which Dave just talked about, was the excess of leverage. So everybody's, buying call options and they're buying leverage futures and,
Mhm.
going long those and just all kinds of like insane. There's so much insane leverage in crypto across the board that I've always just stuck with a spot when I'm trading it, just because it's like it's crazy, and there's so much burn to it, and there's so many games that are playing around with that, so it's impossible to set any stops on the stuff like that. So it is really truly the Wild West. But I think a lot of that has been flushed out by now. And
Yeah.
I think the biggest thing that we're seeing right now is what is called crypto, the OGs. So the old guard, the people that have been long this stuff for a long time, well over 10 years, they're starting to sell into the highs now. They're starting to distribute. So wallets that haven't been touched for over 10 years are starting to open up and
Mhm.
be flushed out through exchanges.
Well,
So,
you could pull up a chart and show that they're like we've talked about these levels that should traditionally be levels of support are getting kind of just pushed right through. And some of it's that. The other thing, remember, is the institutions are involved now. So you've got a lot of institutional money, and institutions will absolutely fade retail and do it to no end to where they can, get back in cheap. So, you have that it functions more like in some ways like the market and stuff too, like another asset in the market, because the institutions are involved. So we have that as well. So this also can be the institutions really selling out, taking a bunch of their profits off the table, driving it down, creating the fear, and then they'll step in wherever that level is that they want to step back in and run it back up. So,
yep,
we see
they're
this all the
looking
time with stocks and markets.
yeah, they're looking for the right conditions where they have the liquidity to get in and do what they want to do. And it's not up here. That's certainly the case. Right now, we are starting to see on an RSA 14, we are starting to see an oversold condition, which we haven't seen since the March timeframe. So that's one thing. Now, one of the concerns that I had was we've got this point of control, which has been out there since let's see, I've got a little too much here. Since
Mhm.
November, we've got this point of control, which was at 96,000. and that got cut through like it didn't exist. And that's a little bit concerning for me right now, that some of the stronger, let's see, it's November. Yeah, it's to back to here. So I got too much data. So for the last year, what I'm looking at is 96,000. That is where, so the majority of there's half the trading that's occurred over the last year has been above 96,000. The other half has been below it. And so you'd have to view this as support, right? So anything above there is bullish, below there is bearish. We've also broken this longer term trend line, which again, it just cut right through it. I mean, it's like it didn't exist. So the selling has gotten quite extreme. I do expect to see at some point here, I don't know when it's going to happen, but at some point we're going to get a relief rally. The difference here, what will tell me whether to stay in or avoid this bear cycle is if we flag out from here. If we rally up and then it just consolidates. So you can see that through the last cycle where we did this. This was in the beginning of 22. We just flagged out for a while. So we sold off really hard. And then just when it looked like it was going to bounce higher again, we flag out. And that was your opportunity to get out and to avoid, round tripping. Because look how long it takes to round trip. I mean, this is the thing that folks hate about crypto is like, or any asset for that matter, is it's going to take you. So here's April of 22, and it took you it took you 2 years to regain your value of that. So if you don't want to sit through there, watch for the flags to set up. If there's a flag that sets up here, then sell into strength. You can always get back in if you want to. Any other questions from anybody that's out there live with us today? We got a good group that's out there. Or if you're watching this on a replay later on, let us know if there's something that we can tackle for you next week after we have after we get through this week and see what kind of things we run into.
Gold's interesting. Gold had a nice little bounce last week, but it's still kind of basing out and everything. So, but if this thing really accelerates, I mean, most assets are going to get beat up. If this is it, and this really accelerates, most assets are going to get beat up. I would say gold will probably hold a little better than others, but there's going to be probably a good tradable opportunity with like the GLD and stuff coming up if that happens. Yeah, I think either way, I think gold will have another rally into the end of the year. If we get extreme fear, you'll get some sell off first, right? We'll have to correct. Maybe we'll get our 10%, and then it'll rally with it. But I would be watching the GLD. It had a nice little rally last week. Burned out its energy to do that, and it's kind of consolidating and getting ready to go again. But I think it's definitely found some support in this area, in this 350, 360 area on that thing. So if you're looking at entry points, you can see where we had that big consolidation and then broke out from like about 320 or so. So that's what I kept saying, 340 and below on gold I like.
The thing that we've noticed that I've been talking about in our trading room lately has been selling puts on gold has been a very poor trade lately because there's so much froth up here in the call options. So everybody's bidding on call options. And right now, all that leverage is getting wiped out. All those people are having those call options expire, out of the money, worthless. And so all that froth needs to come back down, and the market needs to shift into fear, so they start bidding up the put options again, which is relatively normal, right? And so put options will then become inflated, and then this will be the sign for us to be able to sell put options. But right now, I mean, there's a question that comes into the room literally every week, like, hey, where would you sell on GLD? And it's usually like, it's if we look out at something like this, like right now, if we look out at GLD and say like maybe the 2nd of January, let's see, 31 December is fine. Like, how far down would we have to go just to get a 1% return? Just to get a 1% return, we're looking at maybe 353 just to get a 1% return. That's a
Hmm.
22 delta. 353, which is just under there, just to get a 1% return. That's super cheap, right? That is not worth it to me. So just to get a
No, well,
1%
go to the
return,
call. Look at the call side. Look at the call side.
right?
Actually, go back.
So if you look at the call side, so let's say the price is 370 right now, and if we look at 360, so let's look at 360. So the puts are 560 to 580 or so. If we go up to 380, notice how much more
Mhm.
inflated. So if we go $10 up, notice how much more inflated the calls are. So there's still this massive amount of um, over speculation that's happening on gold right now. It's going to take a while for that bubble to come back down. Once we start to see that even out, then that will be the time to set up puts. But right now is not the time. So that we may still have a little bit more to blow out of this before this is going to be ready to go.
Yeah, I mean, right now actually is more the time to sell covered calls on it.
Yeah, that's
That's why I
true.
say keep saying like 340 is like that's the level that I like getting down to there. But yeah, I mean you could weekly, buy shares, sell the weekly covered call at the money, buy yourself some defense on the back end with a put and arbitrage it,
Yeah,
each week. Right now because of the call premium that's so good.
yeah. So this is why I would say, and we saw the same thing with Bitcoin a year ago. We saw
Hmm.
no
The
premium on the
skew.
puts. We saw so much skew on the calls, and so we had to do a buy right. So
Yep.
same thing happens here right now. You could do continual buy rights and let yourself get called out because it's going to be worth it for that. So, let's see. No other questions. Let's see if there's any other markets that we want to take a look at. What we are starting to see is some of the Mag 7 are starting to really underperform, like Meta
Hmm.
is starting to get beat up pretty hard. Even Amazon has not been great over the course of the last week, although it still hasn't broken trend. Let's see.
Google's up because Berkshire just invested in it.
Right, so Google was the big story today, and the chart looks great. Apple still looks
Hmm.
good, even though almost earlier this year I was about ready to give up on them, but
Hmm.
they've made a nice recovery. So we're starting to get into some bifurcation on the Mag 7 itself. Nvidia,
Tesla took a beating last week, but it's held that 400 level a few times. So we'll see if I think that's a magic number when you look at Tesla.
yeah,
NVDA will know after earnings.
one of my favorite patterns, which I initially got burned by, when you're looking for a consolidation and everybody's expecting the consolidation to break to the upside. Everybody
Hmm.
expects that because it looks bullish. Everybody says it's bullish. All the chart patterns say it's a bullish pattern. But my favorite pattern is when it actually breaks to the downside and it traps all those people, blows them
Yep.
out, and then it whipsaws back up.
Yep.
So just when people start to short this and say, "Oh, we're breaking down," that's exactly when it is. So it's actually a larger time frame pattern. It's just it's an exhaustion at the larger time frame, releasing and then playing
Hmm.
off. But
Well, look at
people that
the weekly shows that.
yep, yep. So this is ready to go, and this is
Hmm.
all like I do have a position in Tesla right now with Diagonal, which is a little bit, a little bit day to day. But as long as the trend has not changed, I'm still in it.
Hmm. Yeah, again, that's why with looking at a lot of these like this, it's why I just kind of think like we're going through this. this frothy time. We're going through this fear time, and it's really a bigger consolidation pattern that's within a few percent of the all-time highs, but we're in extreme fear, and you know, um, getting a just ripping rally out of this would not surprise me. So when everybody sees and everybody expects a market to go off a cliff and fall, like the next bear market's happening, it's on, usually the market does the opposite, So that's where I think we'll have a really good idea over the next couple weeks, because this weekly chart will tell us. When that weekly chart gets down into the low 50s, whatever direction it's gone, that's the direction it's going to continue
If
typically. So
if
that's
if
the
I look
key.
at the chart purely, if I don't know any context of what's going on, if I don't know anything about the Fed or earnings or the shutdown or anything like that,
Yep.
if I just look at the charts, I see short-term energies which are very high right now. So there's a huge potential for a movement, which is why we have long condors in play
Yep.
for the next month or so. But at the same time, I see a very, very exhausted monthly chart, which is going to be just a ball and chain on any kind of
Yep.
rally.
It's like a drag on it.
So you have to ask yourself, like, okay, what condition would come along that would satisfy all of those, that would make everybody happy, or would create the greatest amount of pain? And to me, the solution to that is a quick, violent, nasty, unpopular move to the downside, which wipes out any remaining bulls, followed by
Mhm.
a very, very rapid whipsaw back up again to finish off the year. I
That,
think that
that's
may
actually a
actually,
that's actually a great point to end on. If you don't mind, bring up the S&P chart one more time. Because if you look at the times when the monthly chart's been exhausted, and we looked at this a little bit earlier, but just to crystallize it, you'll have these months where the candle's just ridiculous. It's like this massive negative candle, but by the end of the month, it's bought like all the way back up, sometimes to positive. And it's usually when you get these when the monthly chart's exhausted, right? And you've got a strong like a weekly chart, and it absolutely um sells off, but then comes all the way back by the end of the month. We see those time and time again. Yeah, there's a good example right there, you know, where you get this nasty sell off, but then all of a sudden, um, within the span of days, it just rallies all the way back. And where the market, like the S&P would be down like 500 points for the month, all of a sudden it ends up positive by the end of the month.
yeah, look at this one
And
here.
that's
I
a good
mean,
example.
this one, it's like we'd given up. This was actually a full 10%
Hmm.
haircut. We were down a full 10%, and everybody was like, oh no, we're heading down to here. And then boom, right back again. So, just in time for our little tariff tantrum. But um, that's kind of what I'm expecting. So with that said, can it go higher from here? Absolutely, of course it can. But I would say if it does go higher from here, it's really going to put a crimp on things into the end of the year. I think it's going to be a struggle if the market tries to break out from here and tries to head for 7,000. It surely has the short term energy, but at the same time,
Yeah.
it's going to get up to 7,000, and we're going to have three time frames that are in full exhaustion.
Yep.
And that could turn out to be a very bad start to 26.
And that's
So,
why I said I'm fine if it does that. It's just I'm getting out before the beginning of the year and just
yeah,
waiting to see what happens, and then you taking advantage because
yeah,
you're going to be in that position where January, February, first quarter is going to be rough.
yeah. So we got to pay the piper at some point. It's a question of whether we do it now or we do it later. If we
Yeah.
do it later, it's going to be worse. If we do it
Yep.
now, it could be short, sharp, and surgical. And then a month from now, we're going to be like, oh, that was no big deal. But at the time,
Mhm.
it's never fun. So,
No.
all right, everybody. Thanks for joining us here today with 12-minute trading, our little Monday soiree into market. And we'll do the same thing next week. So we hope to see you next week again. So from Dave and myself, we'll see you guys next week.
Bye, guys.
Bye now.